All right, welcome back, everyone. I hope you're all doing fine and well. So yes, it's me again, and yeah, I know the video I'm doing today it's more like web view, and I don't like it myself, right? So it's because my Mac, I had an issue with my Mac charger, so I'm trying to fix it. I was too lazy to step out, so the person that was supposed to deliver failed, and here we are. So without further ado, guys, let's jump straight into the video properly, okay? So first off, what do we have here today? We have dollar. And I mean, haven't we seen it all? Look at this destroyer right there. This is crazy. Look at this gap. The gap happened on Sunday to Monday, and then it got filled before the close of business on Monday. And then it had a little bit of toppings to it on Tuesday. And right here we have on Wednesday and Thursday. I've been in a little bit of, emotional disdainment. Let me put it that way. It's crazy. I've been everywhere. My emotion have been everywhere. At the same time, I've been calm. All right, but I want to tell you what I did because of the drawdown that I've been holding since Monday. But you know how I used to do my video before. You know what I do talk about first off before I actually do anything serious as regard trading or even analysis or whatever. I love to talk about fundamentals first. So let's quickly take a look at what we have today economically. Okay, so today we're expecting, I mean, this week already we've seen a lot of data come to this week. We've seen, on Monday, did we have any serious data on Monday? Let's take a look at it. On Monday, there was no serious data aside the US manufacturing PMI that came very good for dollar. Okay, it came higher than expected, so that's very good. I'm still going to talk about that later. On Tuesday, we have unemployment, the quarterly employment change and unemployment rate in New Zealand. The employment change was good, the unemployment rate remained the same. So literally we had kind of like a stabilized job data in New Zealand. And then by 4 p.m. on same Tuesday, we have JOTS job opening, which was very low compared to what the market was forecasting. The market is forecasting a 0 point, a something around 100,000 reduction in the price in the amount of job opening. All right. However, we got something around, it's a lot. I'm still going to talk about that. I can't really factor the difference between 760 and 810 right now. My brain is not doing that math. It can't do that high-tech calculation right now. So I'm going to talk about that later. And then on Wednesday, which was yesterday, we had some very interesting data, which was the ADP. It came very good for dollar. It came around 36,000 plus. I think I can remember that. 36,000 plus for dollar, which was very good. Okay, don't forget ADP, JOT opening, and the one coming today, which is the unemployment claim. All these things are what is computed together that gives analysts idea of what NFP is going to be, and we have NFP coming tomorrow. So also we have final service PMI came yesterday. Okay, the final service PMI for United States came yesterday. It came shorter than expected by I think zero point 0.2, right there, something like 1.6, right thereabout. Okay, which was not very interesting for dollar, but we're gonna talk about that later when we get to the edge fund. I mean edge finder EF. So and then today, which is the most important, we have some very interesting data coming from the United Kingdom. And the reason why I'm actually going all the way back till now, till today, is because I have some very interesting trade that UK data is heavily involved. And whatever happened today would directly impact those trades. Okay. At this point, I'm actually not scared of whatever comes for for the data in general, because I'm actually seeing a lot this week alone. From Monday till now, I've seen a lot. Okay, I've had 1:3 profit. Okay, 3% profit, and I've seen close to a loss. Like I will show you everything. So I'm generally like I'm emotionally frozen right now. Like just that, no expectation, just just there, honestly. And I'm going to tell you the reason why when we get there. So today we have the Bank of England monetary policy report, we have monetary policy summary, we have MPC official back rate, and then we have the interest rate, which is forecasted to be dropped by 25%. Let's hope they eventually cut rate, or probably they're going to leave it at the same. I don't know, but the market is forecasting that they're expected to drop by the interest rate in the United Kingdom is expected to drop by 25 basis points. So let's see how that goes. And later today, we also have an employment claim. And then by 8:30 p.m., the FOMC member Wallace speeches, and then Bank of England Governor Bailey speak, and everything just ends up like that. Okay, you can check all this out yourself. And on Friday is the Friday of NFP. I mean, we are expecting it. And card unemployment rate. I'm going to talk about this tomorrow. If I made any video about this tomorrow, I'm going to talk about that. But you know how I love to do my videos. I like to talk about fundamentals for because they take a chunk load of my trades. Okay, because now I tend to believe and trust more in the economic data than I do with technicals. Technical can fail you more often than one. But you see, fundamental is something you can trust because it's not what many traders can actually figure out. And also, it's something that you can't really just change. If you ask someone to look at the data now, they're going to see what you're saying. But if you ask someone to spot a support or resistance or a supply zone, FVG, other blocks, whatever it is on a chart, you will see different drawings, different spotting, different analysis. But when it comes to fundamentals, it's what I'm saying right here, the same thing that someone in the United Kingdom is saying. So it's now based on what, and the data that will be released here is the same that will be released globally. So the market is going to react to it. How that gets to be is what we don't know. All right. I mean, how that interprets into the market, how it factors into the market, how it affects the market in general is what we don't know. And what we tend to just forecast. And that's why it's still probability. Everything is still probability in the market. All right. But without further ado, let me just jump straight onto the chart. I'm gonna come back here later to show you what I was talking about eventually. So first off, dollar did a very rough ride on Monday and on Tuesday. As you can see right there, this is 2-hour time frame. You can see the market went up and then it came down. And if it did that by covering this massive gap, I think that's fine. But it did not do that alone. It now came all the way down and added an extra to it, which is not cool, right? It is not cool. I did not like that at all. But anyways, that happened. There's nothing I could do about it. I was heavily loaded on dollar pairs. I was buying USD CHF. I was buying UCAD. I was selling GU. I was selling GJ. You know all my trades. Okay, I've talked about it since last week because I'm still holding the same trade that I joined last week. So that said, since the gap happened, I've just been watching the market, and there comes my DCA, okay, the dollar cost averaging. So when it comes to dollar cost averaging, we all know that if you check all the major pairs, okay, if you are being real with each other, if you check all the major pairs on the monthly band, you see that most likely it ranges, right? They all ranges, okay. If you take a look at USD CHF right now, let's take a look at it. Since 2012, it's been ranging. Right, it's been ranging right here. You can see that it's been ranging on a monthly band. Nothing too serious over here. Okay, sorry for that. Okay, it's been what? A simple range. So when it now comes to dollar cost averaging, it's just how you can capitulate on all those pullbacks to make a decent profit for yourself. But this is very, very dreadful because if you're selling in a kind of move that is so demonic and so crazy like this, you might end up blowing your account. And that's why I run my own dollar cost averaging, okay, while doing what? While following trends. So that if I see a very decent push to the upside like this, and I take a sell, maybe this first pullback 50%, I take a buy right there, excuse me, and the market decided to fall down a little bit further to 61.8% Fibonacci, I will take another buy right there. If the market decided to fall down to 78.6, that's where I'll stop buying. I'll take another buy, and that's where I stop. If it falls to 100%, by that time, it will have canceled this major structure right here, and I will take my loss and move away. The mistake that most people that most trader does is that when the market is pulling back, they keep buying, fine. Pull back again, keep buying, fine. They forget the market structure because they're already in too deep with their lot sizes, okay? People turn DCA into martingale. You know what I mean by martingale? When you have one standard lot here, the next dip, you took 2 standard lots. The next dip, you took another 3 standard lots. That is martingale. All right, that's crazy. That can wipe your account off before the market even find its way back to the top. All right, but what I do is that my initial trade is always very small. In general, I risk 1% of my account. Okay, but I always start with 0.3%. Then if the market dip further, I will take another 0.2. If it dip further, I will take another maybe 0.3 or 2. And then don't forget I have 50% Fibonacci, 61.8, and then I have 78.2, I guess, 78.2 or something like that. Okay, once this is done, if it now drops, if I still have extra, maybe 0.1 that I have not opened, if it drops further to 100, I might take 0.1, excuse me, percent. Once that is done, anything below that, I'm done. I'm technically done. Sometimes I might lose more than 1% that I'm targeting. Sometimes it might just be exactly 1%. Sometimes it might not even be up to that. All right. So it's always like that. That's the way I do my own dollar cost averaging. I follow trend with it. So now let's go straight into the deals of the day properly, where I explain my entire trade to you and what happened to me this week. So first off, I took a buy right here like 2 weeks ago. Okay, like 2 weeks ago, I took a buy on USD CHF. I have so many trades running right now. Okay, so I took a buy right here. Excuse me. I was trying to look at the chart right there. So I took a buy. Trump started talking. Okay, he's been saying a lot of things lately. So he started talking. He started threatening with imposition of tariffs here and there, stuff like that. So the market started pumping. It pumped really hard between Sunday and Monday. And then later during the London session on Monday, the market started dropping. Now, you might ask me, why didn't I trail? I started trailing not because the market pump up. Okay, I'm used to pumping up. But the only way I will trail is if the market pump up, pull back nicely, and then I get a break of structure right here. That's when I start trailing. Okay, I put my stop loss here. If my stop loss was here before, I shifted to this stop right here, this lower high. Okay, so and then if you make a new high, pull back again to this zone and push up again. The money broke above here. I put my stop loss, take it away from there, I put it back here. All right, that is how I do it. That is how I trail my stop, technically. But this time around, I couldn't. Why? Because there were no pullbacks at all. Okay, the market went up and then it came down. No pullback, not a single one. So I couldn't trail it and I still had to be holding onto the trade. So right now I'm still holding USD CHF very tight to my heart. And even though it's kind of like giving me a heartburn or something, I still gotta hold it. Although this is where the dollar cost averaging comes in, because I took a new buy right here. This is my first entry, and then I took a new buy. If you put a Fibonacci from here, although we didn't get a new break of structure, right? So I'm gonna have to put my Fibonacci right here. Okay, so we have high, high, higher, low, more like a double bottom, right? This is a very crazy kind of way to draw Fibonacci, but let me just see if I can make something out of it. So I got this pullback first of 61.8. I got this buy, but I was trailed out somewhere around there. So then the market make a new drop to the downside, which came all the way down here. Don't forget this buy, I took this buy some time ago that I got closed me out. It got me closer like 2-3 times, okay? And then this is the next one I took. So when the market now broke above here, I took this buy right here, okay, which was around 78.6, right? Market went up, came back down again to retest 61.8 Fibonacci, which is something that I took again. Okay, why am I taking all this trade on dollar? Do I really believe in dollar that much? I mean, did someone give me money that, okay, start buying dollar? I wish someone actually gave me that money. At least I will have a consolation or something. Nobody gave me any money. I'm just still holding on to the fact that dollar is still pretty strong. So let's take a look at the US economic heat map right here. I think this thing is already hanging again. So, okay, I think finally we figure it out. So let's take a look at the US economic heat map. Let's see what is happening right there. So it's loading up. It refreshes every 12 hours, I guess, every 2 hours. So that's why we have a little bit of drag, and it's good. So whatever the case may be, I mean, it's all fine. So we have GDP growth right here. You've already seen all this, but the different changes that happened is the manufacturing and the service PMI that was quite good for United States, because they are still both above 50, still indicating a robust economy. We have a change in what in the unemployment claim, the ADP and the JOLTS. You can see the JOLTS came shorter than expected by negative 0.41 million, which is 410,000. Okay, that is the number of people that lost their job, or probably the job that got closed last month, all right, literally in January. So I was also going through the BLS, okay, Bureau Labor of Statistics or something. I was reading through the report they gave that came out, and it was quite cumbersome. I couldn't really understand. I can categorically tell you I only understood like maybe 35% of whatever it was posted. Maybe it was actually there so people won't understand what is there. But at least I got one or two from it, and I saw that some people actually resigned from their job, probably because they just don't feel it anymore. All right, or maybe they just want to like work from home and they're not allowing them, so they figure they just quit, and they quit. So now we have the unemployment claim coming later today. We're going to see how this goes. The market is actually expecting a higher than expected forecast. That's what has been like. The unemployment claim should go up, all right, because yes, we have a job opening. People actually lost their job. Okay, few jobs is open. I opened last month, so it's well expected. It's just like ABCD. You can easily figure that out yourself. And then the next thing is the unemployment rate, which will be coming together with NFP tomorrow. We don't know how that will go. But right now, as the market stands right now, based on what I can see right now, I can't really forecast or work on what I've not seen, because it's coming tomorrow, or maybe it's coming the next 1 hour. I can't really forecast on that. I can only prepare for it. I can't plan for it. Okay, I can prepare. So right now, with what I can see right here, I'm still leaning towards bullish dollar. Okay, that is just that. So we have a strong dollar. Okay, and then taking a look at the UK economic heat map, which is right here. Okay, let's take a look at that also. It's coming up. Give it like 10 more seconds. It's gonna come. Yeah, there you go. And you can see right here, we have initially we had manufacturing PMI and service PMI that was very good, including the inflation rate. But right now, we have a higher than expected manufacturing PMI, which is still very low because it's below 50. Okay. And then we have service PMI that came shorter than expected. It came lower by 0.4%, which is not 0.4 point, which is not very good. Okay. I mean, it's deteriorating gradually towards below 50, which is not good. Right. We have the retail sales still quite in negative. Inflation rate is slowing down, which is very good. The only data that is good, the only thing that we can hold on to as regard the United Kingdom economy right now is a lower inflation rate. I mean, lower than previous inflation rate. Okay. And that also might be the reason why the Fed, okay, the Bank of England is expected or anticipating to cut rate by 25 basis points, which I think is still going to be counted as negative for them, anyways, in my opinion. It's still above 4%. That is a lot. But let's see how that goes. Okay. The market can take the interest rate cut as a hawkish data, or they might just take it as bearish. But anyways, I still have some short. I'm still shorting pound as it stands right now, and I'm gonna tell you about that in the next few minutes. All right. So this is European Union, or let's just say Euro area economic heat map. Everything is just red over there. I mean, it's just not cool. Okay, they have a terrible GDP rate. I mean, GDP growth. You can see their manufacturing PMI is also quite below 50, which is not very strong, but at least it's higher than expected. It's higher than previous and forecasted also, so which is quite sentimentally taken as bullish in the market. All right, and then the service PMI also 51.3 and 51.4, which is quite shorter than expected by 0.1 point. Okay, 0.1 point. Ah, that's cool. And then we have the retail sales month on month. We have the inflation rate. We have PPI. We have unemployment rate. We have interest rate. Everything is quite bad. Okay, don't forget they called 25 basis points in January, and it's recorded to them as what, as a bearish sentiment, as a dovish sentiment, which is real cool because I'm still very bearish on euro. So when you have all this data, we have a strong dollar, we have a weak pound, we have a weak euro, and definitely a more like a stable yen. Okay, stabilized yen. It's not weak, it's not strong. All right. So that is telling you that anything that is happening right now in the market is directly being affected, is directly caused or initiated by dollar. All the drop that happened this week so far is directed, or it's caused by dollar weakness. Like it's literally, the pound right now doesn't really have that much of a strength to actually undo anything literally in the market. So that said, now let me quickly take you through my open position, and then we call it off. We call it a day. So I'm still holding my buy trade on USCHF. Yes, I know I've said a lot of English. I've thrown some things around. This might be a giant mistake, but at the end of the day, I have a strong dollar. I have a weakened Swiss economy. We have a weakened Swiss economy. I just want to give it a shot right now. Okay, a strong dollar with the technical that looks very good. Although, let me remind you that I'm trailing very close to a monthly resistance right now. Very, very close to monthly resistance, as you can see, which is a very delicate thing to do. All right, but at the end of the day, when the technical aligns with the fundamentals, all I have to do is just to trade. Okay, whatever I think doesn't matter. All right, my thinking, my opinion doesn't matter. Whatever I see on the chart, I trade, and that is all for me. Okay, so that is why I'm in this trade. I'm still holding on to it for now. So heading back to the next pair that I'm holding, which is USD CAD. I also took a buy. This is the second trade also on USD CAD. Okay, you can see the level of rejection that happened right from here because of this crazy gap. I mean, crazy gap right there. It is a whole lot. Okay, it is a whole lot. And there's nothing I could do than just to watch right now. And I'm watching very closely. I have this buy trade. I have this new buy trade. And we have this intraday support right here. Is it going to be used as resistance and everything will just turn to rubbish for me? This trade will just turn to rubbish? Or maybe it's going to get broken and then we see it fly. I'm not sure. I genuinely don't know. But I would love to see how it goes in general. And then I have pound USD that I'm currently shorting. Oh, I love GU right now. This is a beautiful, beautiful trade. Look at GU right there. I mean, the sentiment, the news is out. Yes, yes, yes. They call the interest rate. Imagine I'm recording video and it happened. Ooh, that is awesome, isn't it? That is good. I did not even check the time while I was there. So we have some very interesting data for United Kingdom. They finally eventually cut the interest rate. Yes, they did. And look at that. MPC, every single one of them voted to cut the rate, which is good. All right. So I mean, this is awesome. This is gonna really help my GJ trade. And yes, I believe GJ will be flying to the downside right now. Oh, this is awesome. I don't use take profit anyway, so oh, this is beautiful. This is so, so beautiful. I love it. I love it. So this are another trade I'm holding right now. Let me see if I can actually grab a screenshot for you. And I'm just gonna share with you the trade, how they're flying to the downside. And I hope my trade hasn't closed out just about yet. I hope I'm not using take profit. That would be very, very annoying. Yeah, I'm not using take profit at all, whatever. Okay, that's good. I don't really use take profit for my trade. I mean, not a single one of them, because I want to trade it into profit into the sunset. Okay, I want to trade I always love to trail my profit into the sunset. That has always been my plan ever since I started swing trading. Even though sometimes a crazy endeavor, all right, it can be very crazy, but sometimes but sometimes anytime they work like this, it makes absolute sense. So I'm trying to take a screenshot. Permit me to do that right now. Okay, good. I've taken the screenshot and this is the trade right there. You can see I'm like long in a lot of trade right now, and the trade is running a little bit of. How many profit is this? Give me a minute. Let me check it out. How many profit? All of them. You can do the math yourself. You can see, but it's literally really good. It looks really decent right now, and I love it. Okay, I genuinely love it. So that's that. I can't really find it. This app is actually acting up. So that is that. Anyways, that is that. So you can see the trade. You can see multiple trades on GG right there. Okay, multiple trade on GJ, 1 and 2. This is awesome, right? You can see the profit is plus 200 and something dollar right there, and the second one is plus $134. For CAD JPY, I also took a sell on that one too, and that's $49 profit. For silver, which is the only one I'm trading silver right now. I'm trading all of this trade anyways. Silver is in $126, which I will share the result with you later. I'll share the analysis with you later. And then you can see pound dollar right now. I have to trade on pound dollar. You can see one is $58, which was the one I entered later. Okay, I joined this one this morning, as you can see right here, yesterday, the 5th of December, later in the evening, around 7 p.m. in the evening, right there. And this one, I joined it on Monday, either Monday or Tuesday, I can't really remember right there. And you can see it's February 4th is the one I entered later, earlier, which was $45 right now. USD CHF and UCAD I showed you earlier, multiple trade, right? One, the latest one are running in profit, but the later one, the earliest one, they were running in loss right now. So they're literally running in loss. So those are my trade in general. Before I had a lot of reds. A lot. The only trade that was in profit earlier was just silver on Monday. It was just silver because silver and gold actually pumped on Monday. But since yesterday, everything kind of like eased out, and I'm glad that I held on to the trade and it's actually working out right now. This is a testament that swing trading is fun, but it can be a really, really pain in your bum if you don't know what you're doing or you don't trust the process. Okay, it can be a real pain in your bum. So you just have to know what you're doing and keep at it. Once you know what you're doing, you're good to go. All right. This is my CAD JPY trade. I took a short trade. You can see I'm trading them already. Looks very good. Looks really decent. I love it. I love what I see, and I'm gonna hold it till the end of time. Another one I have right here is silver. You can see I'm trading silver also, but seems to be going back up gradually, which could be as a result of what's going on with dollar right now. No, dollar is doing good. It's actually flying too, because UK kind of just cut their rates, which is fine, but it is what it is. I silver is going back up. I guess I'm good. I didn't take gold anyways. I didn't take gold at all. Gold should be flying as well, which is fun. Wow, everything is good today. All right, guys. So that is all from me today. We've talked at length. I think this should be around 30 minutes. I was thinking it should be around maybe 15 minutes or something. But the fundamentals, I spent like maybe 20 minutes on fundamentals, which is a long time. But I love the fact that we got to trade CPI, the inflation rate together, and everything worked out well. So I will catch you in the next one, guys. Have a great day. Bye for now. Don't forget to subscribe to my YouTube channel. Don't forget to follow me on my socials, here on TikTok, here on LinkedIn, here on Facebook, here on Instagram. Follow me, subscribe to my channel, and I will see you in the next one.